I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 28th of April 2024. I'll be doing the weekly market review, starting with the XY. So here you have the weekly time frame chart. As you can see, price traded to the weekly fair value gap between this candle's low, this candle's high, got some orders there and then retraced. We have this buy side liquidity and this buy side liquidity that I'm aiming at right now. Going to the daily time frame chart, you can see on the daily time frame chart it's refined to this fair value gap between this candle's high and this candle's low. Price walked, you can see the body is respecting it and started breaking up higher. I'll be aiming at these relative equal highs and at this major buy side liquidity to complete the market maker buy model. So this is going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. Price has traded up higher. You can see this is an inside candle between the previous week's high and previous week's low. So the high of this week is lower than previous week's high, and the low is higher than previous week's low. This creates an inside week where, or an inside candle where the market is trying to accumulate and consolidate to build orders around both sides. Now next week we can see just a bit walk inside that small fair value gap between this candle's low and this candle's high. It's not completely filled. We fill this, take our previous week's high, and then run down lower for this sell side liquidity and this sell side liquidity. Just below the sell side liquidity we have the fair value gap and the weekly bullish order block. BD arrays can be used both for entries and for targets. Going to the daily time frame chart, you can see price retraced. This is a daily fair value gap. This is a refined daily fair value gap. Price walked inside that fair value gap, and now I'm potentially expecting price, if it wants to run one more time for the weekly to complete that fair value gap on the weekly time frame chart, it can run towards that bearish order block and then start breaking down lower towards the sell side liquidity. So that's gonna be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. So we're still in a sell program on NQ, ES, NQ, and Dow. You can notice the weekly fair value gap here between this candle's low, this candle's high. It's a bit wider than ES. ES is not really that. It's very small fair value gap when compared to NQ, which means that NQ is really stronger to the downside and it's wanting to reach to lower prices when compared to ES. So from here we can see a walk inside the fair value gap and then break down lower towards this low, and these low right there. So going to the daily time frame chart, you can see that the same thing. Even this daily fair value gap, we didn't reach to that daily fair value gap on NQ, which means it's heavier to the downside when compared to ES. So from here it can just break down lower, or it can reach to that fair value gap and the weekly bearish order block. But I doubt NQ it's going to be reaching to that bearish order block and that fair value gap because it's weaker to the downside. So it might just touch the fair value gap as an institutional order flow entry drill and then start breaking down lower towards this sell side liquidity. And just below this sell side liquidity, you have this small fair value gap between this candle's high and this candle's low. This would be my next target after this sell side liquidity. So that's going to be pretty much it for NQ. Going to Dow, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see Dow here, it has filled a fair value gap. As you can see, it didn't completely fill it and then it has retraced down lower. Now my next target would be this sell side liquidity and the low of that fair value gap. You can see that last week we traded to the consummate portion of that fair value gap and we've seen some reaction. As a result, price traded up higher and got some orders. Then now I'm expecting price to revisit this low, take out the low and reach to the low of the fair value gap, as all of them are means of targets here. Going to the daily time frame chart, you can see price traded up higher It didn't quite frankly reach to the bearish order block, but there's a very small volume balance between the candles close here and the candles close also here. So it did trade up to the volume balance and then break down lower. As a result of the breaking down lower, another volume balance has been created. So next week we can potentially see price attack or retrace to revisit this volume balance to make it efficient, because as you can see this volume balance has been made efficient by printing bodies inside, but for this volume balance it's still inefficient and there is still no bodies here, so volume is being missing between the close and the open between both of these candles. So I'm wanting to see a candle print here. Wicks can do the damage by reaching to the rejection block and then break down lower towards this low, and the low of the fair value gap. So that's gonna be pretty much it for Dow. Going to Euro USD, also known as the fiber here, being the weekly time frame chart. You can see price filled some fair value gap here, took the high, broke down lower. Same here, we've created a fair value gap. We filled and we overshot the fair value gap and we traced down lower. So now my next target would be this low right there. Going to the daily time frame chart, you can see there's a fair value gap here between this candle's low and this candle's high, and just in that fair value gap we have the bearish order block. Price can run one more time to take out these, to reach to that bearish order block and the fair value gap, and then break down lower towards this sell side liquidity and this sell side liquidity. As you can see, this will complete the market maker sell model, just diametrically opposed to DXY. So that's going to be pretty much it for EU. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see here on pound USD or the cable, it has also reached to the fair value gap, filled some of the fair value gap here and broke down lower. Now the recently created or recently formed fair value gap between this candle's low and this candle's high priced completely it and started breaking or retracing. So my next target would be a reversal here to attack this low and this major sell liquidity at this low. So going to the daily time frame chart, you can see price retracing to the fair value gap between this candle's low, this candle's high. It could potentially, this is why I've draw your attention to the fair value gap. Price can potentially reach the fair value gap, although I don't really think it's gonna be reaching because pound is kind of weak at the downside. So it can just from here just starting to break down lower towards the slow and the slow. So I just wanna draw your attention to something here. Some people are gonna be thinking that this is low, high, lower, low, and then higher, high. And many people have both here. And next week when we open and we trade down lower, many people are gonna be buying this, thinking that we're gonna be taking high prices and reaching to this buy side liquidity. Although this is what the book says and this is what the patterns say, but this is not the context here. The context is that we're looking for lower prices, and when we're looking for lower prices or when we're in a sell program, market are going to be rejecting highs and breaking down lows. So this is a very, very true phenomena in the markets, where you can see price forming highs, rejecting them, forming highs, rejecting them, and then breaking down the lows with a very, very high magnitude and speed. So, like the high resistant and low resistant liquidity runs, high resistant liquidity runs will be buying in a sell program, and the sell and the high probability or the low resistant liquidity run would be selling in a sell program, selling just above the highs because the market's going to be rejecting the highs and starting break down lower. As you can see, highs took out the highs, rejected them, and start breaking down lower. Every time we form a high and we take that high, we start rejecting it and break down lower. And the same thing is also mentioned when we're in a buy program. So I'm not gonna, as you can see, from the low, took the low, rejecting it, started breaking up higher. So I'm not going to go into details. I'm not going to be producing a teaching inside the weekly review, but this perhaps could be a teaching for another day. But just keep in mind that in a sell program, market is going to be rejecting highs and breaking down lows, and also the markets in a buy program is going to be rejecting lows and breaking up highs. So as you can see, this is where the market is going to be rejecting the highs and soon will be breaking down the lows. And just below this low, we have this low, we have this fair value gap, this fair value gap, and these three lows right there, right equal lows. So this is what I'm aiming at. This is not a unicorn. Some people call it unicorn. Some people call it market structure shift. Some people call it the change of character. All of these namings, break of structure, all of these namings are pretty premature. You gotta look at the markets in the lenses of the higher time frame and get the context of what the market's trying to reach to. Don't be indulged in all of these patterns trading. Just look at the market from the lens of a market maker, from the lens of a smart money. Don't look at the market from a retail trader where all they're looking at is just patterns. Even if it's like on the seconds charts, minutes charts, they don't care about what the market's actually doing. So that's gonna be pretty much it for this weekly review. I just want to state out that next week is gonna be chaotic because we have two important events that are gonna be happening next week, and I'm pretty sure this is pretty unique, and we haven't been into any kind of that event in about a year or more than a year. So next week we have both NFP and FOMC interest rates announcements at the same week. So on Wednesday, the 1st of May 2024, we have FOMC interest rates announcements at 2 p.m. and then the meeting at 2:30. All of the timings I'm mentioning here is in New York time. And then on Friday, the 3rd of May 2024, we have NFP. So on Wednesday, FOMC, and on Friday, NFP. So you gotta be careful when you're trading because there's going to be a very high degree of manipulation in the markets next week. And if you don't hold your guns properly, you're going to be laid in your ass. So you got to be careful trading next week, especially Wednesday, Thursday, Friday. Now, Friday after NFP New York session, you could be trading it if you know what you're looking for. Otherwise, just wait until Monday next week. So that's gonna be pretty much it for this week review. I really hope you found something insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.